All right, are we looking at a Santa Claus rally this year? We are used to getting those in the past, but this year's been a little bit different. 2022 has not been your typical year of swing trading in the stock market. So, what can we expect with just 2 weeks left in this market calendar? Well, first off, you had a really rough start to this week. This is the week that with the low volume, people were hoping that we would start to see the buyers come back in, take advantage of a low volume market and drive prices higher. That's not what started off this week. And last week was by far a horrendous week for stocks. So things aren't shaping up in that way. But with the low volume, you may still see at some point, even more so when we creep towards the end of the week, for a potential dead cat bounce rally. What we're going to do in this video is look at all the charts. I'm going to go through the SPY, the NASDAQ, we're going to go through the Russell 2000 and also take a quick peek at the volatility index, and going to give you some conclusions of my own of what I'm looking at, what I'm expecting. I am short on this market right now. I expect the market to continue to trend lower in the year end, and I'm going to go over why I expect that. So before I get into the charts, though, make sure you click the join button down below. That's going to give you access to all of my market research that I provide each and every day to my YouTube members. And you're going to get with that updates on the big tech stocks. You're going to get updates on the indices, and you're going to get different kinds of trade ideas and thoughts on different setups on individual stocks. So check that out by clicking the join button down below. Now, let's look at the charts here. First off, we have SPY. That is symbol SPY. This downward declining trend line. This thing is still intact, not looking at getting tested anytime soon with the break today below this 50-day moving average. That was pretty significant. You could get a rally back at some point in the new year, but I don't think that's going to happen over the course of the next 2 weeks. If it does, that's going to probably be because of a significant news event that takes place. Right now, I don't know what that would be. With that in mind, that declining trend line, you also have this topping pattern going back to November. So you look at that one, a lot of consistent choppiness going back to the beginning of November, finally has a breakdown. Just last week, late last week, we got the breakdown, breaks below the 50-day moving average. Yes, we were getting oversold on stochastics. So there is the potential for a dead cat bounce there, especially if you zoom in close enough. And by close, I mean you guys zoom in a lot. You have a tiny little gap there that has been left unfilled. So that could be filled as well. I wouldn't even be surprised if we got a bounce at some point back up to this neckline of this topping pattern before reversing again. I think that would be a pretty steep bounce. I think the more likely one is back to this 50-day moving average or to a gap fill. But ultimately, if we continue this decline lower, then we're looking at moves possibly to test, and there's not a lot of support underneath between here and the lows from October. But the only ones that really stick out are the ones here from November and the ones here from October, and that would be the intraday lows that was formed. So those are the two levels that I'm going to be watching going forward. You also have to remember too that this is a confirmed double top pattern that has formed and confirmed as well. That's a bearish pattern. So that's SPY. Now let's look at the Qs. And again, I'm short on SPY. I'm short on the Qs right now. I've been taking some profits here of late just so that if there is a dead cat bounce, I am at least extracting some profits out of those trades and able to weather any kind of dead cat bounce before what I expect to be the resumption down lower. So the Qs, you got this nice level of support. And what happened? Price traded right down to it today and held it so far. That's going to be a very interesting level to watch in the days ahead. Now, does that necessarily mean we're going to bounce? No, because this could be just a part of a bigger bear flag pattern here. If you look at it, zoom out some, yeah, pretty nice little bear flag pattern that has formed over the past couple of months. Lots of choppiness. I would be looking to see how the market holds this support level going in tomorrow. Does it hold? Can it close above it? The closing price is really what's the most important thing to me in this particular chart. If it closes below it, that's where I feel like, okay, this is a time to be concerned. I'm not necessarily looking to push my positions right now by adding more short positions, but I do think that it can still trickle lower. Where I want to add more short positions or more bearish exposure to the market would be on a snapback rally. You also have increased volume here over the last 3 days. Not today, and I don't expect it to get any better in the days ahead, but the previous 3 days last week, above average volume. So there was some strong selling. There also may be some tax harvesting from people trying to get rid of some of their losing positions from this past year. And why is the NASDAQ doing so bad? Well, if you look at stocks like Apple, for instance, what has it done? I mean, look at over the last week. This thing was trading as high as 150 almost post CPI report. Now it's trading at 132. That is a huge, huge move. That's a 10% move on the biggest company there is. That's a $2.3 trillion company experiencing a 10% pullback. So more than 10% actually. So keep that in mind. Then we got IWM. What to make of this one? This is another one that has got a double top pattern that has formed. It's tried to break above this pattern. Hasn't been able to do that to any great extent. So let's go ahead and just get rid of this decline trend line right here so it doesn't get in the way of our analysis. Then you have this double top pattern that has formed, right? Right there. Double top pattern, it confirmed it. Now it's pushing lower. And by the way, before I forget too, there was a gap fill. I know I'm going way backwards here. I don't mean to be jumping around, but there was a gap fill on the Qs as well. So this gap fill got filled, and then on SPY, you had a gap fill today as well. Just wanted to say that before I jumped around, or before I forgot, because I thought that was pretty significant getting this gap fill from November 10th. That's when we had a big spike higher. So from a technical standpoint, that's always intriguing. Now I'm going to go back to IWM, I promise. Did not mean to be chasing the charts around like a cat chasing after a little red laser dot. So below the 50-day moving average, declined for the last 4 days. Nothing has been good for this market since the CPI report came out. Really, for the IWM at this point, this is what I'm watching. Are we going to take out this support level? Remember, IWM is the only one that did not have a break below those June lows or a close below the June lows. Has not had that. I think that's in store here. At least a test. That's what I'm looking for. A move back down to like 163, 164, and then can it get a bounce? Can it push back up off of this support level back to new, or at least give you a dead cat bounce off of it? Give you something, because this market's really been awful for most traders this year. So keep that in mind. VIX. What do we got here? So you have the market that sold off the last 4 days, but then you have the volatility index. It's down 3 out of the last 4 days as well. Now, if you don't know what the VIX is, it measures the volatility in the broader market. Typically, when the volatility index goes up, the market goes down. When the market goes up, the volatility tends to shrink and the VIX index goes down. So we're seeing 4 out of the last 5 days where this thing has actually been somewhat neutral to slightly bearish on the VIX index, which is what you would think. If I was looking at this chart right here today, I would say, hey, that looks like the market might be trading sideways or slightly higher, but it's not. It's actually, we've seen what the SPY, the NASDAQ, and the Russell 2000 has done. It's been selling off pretty hard and pretty fast. I mean, NASDAQ's down about 10% off of that CPI report. So what we have here, what we want to keep in mind, yes, historically, we expect that Santa Claus rally to give us a nice little boost to the portfolio at the end of the year. So far, based off of what we were seeing last week and what we've seen so far this week, it hasn't happened yet. But the one thing that could be going well for it is the fact that it is a low volume week. And that could, if there's enough buyers out there that are willing to buy some stocks heading into the new year, could see a little bit of that momentum come back into the market, especially if we're with us hitting some oversold conditions on the stochastics, on the daily. That could give us like a 2 or 3 day rally there. But I would only view it as a dead cat bounce. If you enjoyed this video, I'd encourage you to like and subscribe to this channel. Tell me down in the comments below, what are your plans for 2023? You think you're going to see a bull market, bear market? I would love to hear about it. I am curious to see how this market closes the year. Are we going to close at the lows of the year, or are we going to put in some kind of a relief rally? Let me know your thoughts down in the comments below. Thank you, and God bless.